All right, what's going on, everyone, and welcome to another episode of the Market Misfits Podcast. I'm your host, Joe Shiva, joined by my partner in crime, Smiddy, and today's special guest, Wall Street Jesus. Jay, how are you doing, buddy?
Good. What's up, everybody? I haven't been on this in a while. I was excited.
Yeah, it's been a while. Honestly, we haven't done one in over a month because
Why?
We usually do them every 2 weeks, but what ended up happening is Smitty was kind of off the grid for a little while. Then, in all honesty, the market wasn't really doing a whole lot for a while. You were kind of talking about the same shit, you know, when Miguel getting gemmed, nothing's really changed, and we like to talk about them, right? And then we're listening to what you say, and I'm like, it's just same shit, different day. So it's like I don't want to regurgitate the same information. However, things have changed a little bit, right? We've had a lot more economic data come out. We had more today. We have some more tomorrow. There's
the Fed next week. The Fed. So you got some stuff cooking.
Yeah, definitely some more fun now. I don't think people, at least I didn't expect another push up to all-time highs after all of this, but hey, that's the way the cookie kind of crumbled. Today is September 10th. I didn't forget this time for those that are listening to the recording. And we, as we usually do when Jay comes on, I like to take what he does on the Flow Show every single week. You guys can catch it on Thursdays for free on YouTube. And like kind of bring it into more of a live environment, talk about what he's seeing going on in the market. We ask questions, we give kind of our takes. So, Jay, kind of take it away. What have you been seeing? Got a lot of stuff coming out. It's been an interesting couple of days.
Yeah. So kind of the way you put it, the market got to a point where, you had more bulls out there, like sentiment positioning wise, but you still had some doubters in the market. We talk about, and I could dig up the chart eventually if we want to look at it. It's pretty interesting, but it shows the difference between discretionary positioning and systematic fund positioning. So, in general terms, a good way to look at it is you got these systematic funds, CTAs, vol control funds. These are, they're managing money, they're moving money based off of, levels of volatility, some macro signals, SPX levels and stuff like that. There's not any emotion involved, right? So it's not like us, I'm not feeling bullish or I'm feeling bullish today and we make moves. It's very systematic, hence the name, right? And then you have kind of the other side of positioning, which is this discretionary money. Humans like us managing money, where there's a lot more emotion involved, right? The market could be strong one day, but for whatever reason, we may not feel bullish about it. So we could be shorting into it or not getting long. And there's a notable difference between the two. You have systematic funds that have been long and strong, pretty much tapped out now. So they got a full tank of long exposure from CTAs, vol control funds. Anywhere you look, they're pretty much capped out or close to capped out. But at the same time, you have discretionary funds that aren't even long. They're not net long yet, right? So they're kind of more neutral. A lot of hedge funds are sticking to their names, being hedged, right? Not really any net long or short exposure here. So you're kind of in this period where you have some extremes out there, but at the same time, you don't have that big extreme that usually tips the momentum on itself, right? You need a catalyst to kind of bring a shift in momentum. And without that major catalyst, what you're more inclined to see is more of these shallow dips get bought. But at the same time, you don't have that tailwind to the upside that you once had. So you run into more trouble every time, like kind of today. Market makes a high, but it runs into some selling. You start to see more divergences. You start to see cautionary signs start to perk up when there's strong days, right? So it's almost like a tug of war, but still net bullish because it allows you to kind of stick to names, right? For those of us who don't trade the indexes, there have been, and we could talk about it. I mean, that's where all the excitement's been, in my opinion.
Yeah.
Like, we talked about it a while ago.
Baby. Come on, Jay.
Yeah. Like, if you remember, the last time I was on here, I was complaining about the lack of names out there, new names. It was a batch of names that usually get bought when the market's bullish, and then it's the same names over and over and over again. What we've just witnessed over the last, I don't know, couple months now, we've seen an explosion in these cheaper priced names, under the roof type names, and a ton of money to be made there. You know, you're talking about $4, $5, $10 stocks doubling, tripling, right? As you guys know. So that's where all the fun and the excitement has been. And it's allowed us, for those of us who do trade names, allowed us to kind of stay away from the indexes and look for alpha and opportunities in individual names. And that's kind of been the playbook for what we're dealing with right now.
Yeah, I mean, look at NBIS, right?
Like, well, you know that well, right?
Monster. It's a monster. Even that last pop is crazy.
What about BE? That might be percentage-wise a bigger monster, right?
Honestly, BE is now officially my best trade I've ever had by a sizable amount. That was a disgusting move that thing has had. And again, like I told you, Jay, last time, and Smiddy knows this, is like I've traded more random names that I would consider random names this year than I ever have. And obviously I have a much more of a I trade a lot more on the indexes than anything, right? But some of these other ones, I'm like, that's crazy. It hasn't been the Microsofts, the Apples, or the Amazons of the world that I've traded. I've traded most of these, like the NBIS, uranium, the slowest moving, silver. I'm in silver right now, right? So been a lot of interesting ones. But I think the harder part too, and I know you mentioned this, and I said this to Smiddy, I think on the last episode we did, which was over a month ago. I'm like, now we're at a point where, at least in my opinion, it's been like a stock pickers market for some of these other individual names that are starting to get bought up. Yeah. But before, you could have thrown a dart at the dartboard. Yep. And made money. And I think that is going to screw a lot of people that don't know how to trade in these consolidating markets, or these ones where the rotations happen, because it's been a lot more rotation game now. The Russell, right? That we had some rotation into that. A lot of stuff came out in tech. So it's definitely a different market than I think. Yeah, and even a more recent, the last couple of weeks, it's been more sporadic, random. Like you'll see the index is up, but certain parts of the market not participating. And it goes back to that correlation being so low that we like to look at and stuff like that. But to your point, I think, and this is where I think more trouble comes in. Over the last couple of months, it was really difficult to lose money in individual names on the long side. Like you really had to F things up pretty bad to lose money in individual names over the past couple of months. That's how crazy it's been, because if you think of it, even like some of that before the Liberation Day lows, the correction we just went through, it was kind of, and I can tell you firsthand, the big names, the large mega cap, the $200, $300, $400, $500 stocks, they were the ones that were ripping and keep going. And you guys know, like, that's not my game. I'm not buying NVIDIA at a couple $100, especially the equity, and trying to make money there. So while that's going on, I have very limited opportunities. Like I'm usually finding a batch of names that may participate with it. And then after that, they're slim pickings, okay? So I really had to kind of grind it out a lot through the prior bull trends that we had because they were thin. Here, it's been completely different. Like one, you get out of one name, there's another 3 names you can choose from. Like it really, this type of market doesn't come around too often and doesn't last forever. And I think what you're going to run into, and this is what I try to remind everybody on the Flow Show, everybody thinks they're Paul Tudor Jones now. You know what I mean? Everybody thinks they found it. They got this new system, or they got this new stock picking technique that they think they've found, like they see the light now. And it's the market that's doing it. You know what I mean? It's the market that's making a lot of us look good right now, and not necessarily what we're doing. But as long as you can acknowledge that, and to your point, react when the times change and adjust, you'll be okay. But for some of the newer traders who think that they've discovered something, they're going to learn the hard way that when the market changes, it's going to be a lot different, but the good times never last forever, Joe, no matter what. You go through cycles, the large caps are where it's at, you make money there, that's not going to last forever. There's a cycle where the indexes are where you need to trade, the names
stuck. You can't find opportunities there. That's not going to last forever. We talk about it all the time, the ability to try to hang around for your time and then be aggressive when your time shows up. Remember, we had that discussion, I think, the last time we were on here. And that never goes away, that never goes away. But yeah, recently it's been, listen, it's been great out there in names, But we could talk a little bit about kind of, because right now I think what's interesting about the market is this. I think while we're waiting for some sort of catalyst to maybe rock the boat, and you got the Fed next week where they're going to cut rates, definitely it's a matter of are they too far behind the curve here where they have to cut a half, right? So go ahead. I see you want to.
Yeah, no. So I want to ask you that though. So obviously a big thing that we talk about too is, again, we don't have a crystal ball, we don't know, but again, we like to talk about where we think things might go, right? Just I think I'm curious to what you genuinely think. One, should they cut rates in your opinion? And two, it sounds like they're probably going to. What is the typical reaction when you're sitting at all-time highs? And in all honesty, from what we've seen from economic data, it hasn't been good.
Yeah, and I think you answered the question before you even asked it. I don't know. Nobody knows. You go off prior instances, like, for example, sure. I can't remember, I think it was the last September when they cut rates was the only time besides now where financial conditions were so easy and they cut rates. Like usually when the Fed is cutting rates, the market, the data is forcing them to cut rates, because they're always late. They're usually the market's correcting, usually the economic data is deteriorating, and that gets them to cut. Here, you've had a different situation because while the stock market's at new highs, while liquidity is in flux, while all those things that you usually don't see when rate cuts are being spoken about, you have also like a housing market that people are saying is frozen, right? And that has a lot to do with rates. So it's a different dynamic here at play. And for me, it's going to be really interesting to see the reaction and the rotation and what comes out of it. You understand? Instead of predicting how this may shake out, I think it's better to sit back and react and kind of let what we look at the flow and the price action do the talking, right? Because I could see a scenario where tech and AI kind of run into some trouble and they rotate into all the other stuff that hasn't moved because we haven't had rate cuts in so long, and it makes sense with AI and tech being at highs and being expensive and bubble talk and all that. You could certainly see a little cooling off, a correction there. Or you could just see, bearish reaction across the board. If the market, here's what it comes down to. If the market feels that the Fed is late, okay, equities are going to sell off. And what equities are going to do, they're going to force the Fed to do more because the Fed is late. You understand? So you're going to see these signals out of the market to determine whether, we have something we need to deal with in regards to correction and the Fed's got to do more, or, it's kind of this Goldilocks scenario where we see, kind of more of the same. But no matter what, I'm a market guy, and what I think needs to happen, I think for this market as a whole to go higher in a healthy way, you need the other stuff, like we've been seeing of recent. You need the other stuff to get involved. Okay? So the stuff that relies on rate cuts and has been rallying because of rate cuts, they need to continue to see rotation and lead, in my opinion. They got to outperform for this market to continue higher in a healthy way. I think if we see more of what we saw today, where you get Oracle gapping up huge and all these AI names exploding, even more based on AI, just AI news, I think that's what will bring on some trouble and a potential correction, So that's kind of how we've been looking at it too. The more we see money rotate into other areas, right? The more flow we see in new names and new sectors and just anything fresh, basically, the more we want to participate and get involved. It's okay to risk some of the money you made, right? right now you don't want to give back all your profit. That should be the number one priority. Right? We talk about how great this run has been. The last thing you want to do is give it all back in some drawdown or correction. But it's okay if we're seeing new names, new things getting involved to risk some of that money and try to take advantage of upside. You understand? But as long as we're seeing new stuff get involved, I think where you get in trouble is if you're chasing the same names that you probably sold lower, higher, just because there's nothing else to buy. Quick example. If Joe is buying BE up here, right, after buying and selling it a lot cheaper, that's not a good thing. That's not a good sign.
That thing is 3x since I bought it. I am not buying more.
That's what I mean. A lot of, especially on the retail side, a lot of traders do that. They when there's nothing else to buy, when there's not any momentum anywhere else, they can keep going back to the same names. We saw it with Mag 7 for a while, right? That's never a good thing. That's always an early sign of a correction building, and it's only a matter of time. You know what I mean? So I think that's kind of, in simple terms, that's kind of how I'm looking at things the past few weeks. I've been raising cash, right? Because, again, I want to hang on to the bulk of the money I've made here. That's priority one. So I'm raising cash on any old stuff I've been holding. So names, let's say like BE and NBIS, which you've been holding for a while and rolling, I'm lightening up on that stuff. And any new names that may be catching aggressive activity that I like, I'm willing to put on some risk there. You understand? And that's generally how I'm playing it right now, to kind of protect myself at the same time.
Yeah, that's what I've done, and I'm curious what Smitty's done, but I've done the same thing. I'm usually, when Jay says he's taking an elevated cash position, that's when I perk up and be like, yeah, I probably should too. But I didn't have much positioning left, in all honesty, right? Like I just, some of the rolls from some of the stuff that I've done, the conversions that I've done from some of those rolls, like on NBIS, when, it went through a bunch of consolidation, right? Yeah. After I got those moves. So my rolls went worthless. So I was like, but I still had some equity, right? So now it's like, okay, that pop was disgusting. I don't even care if it goes higher, right? I just don't. The move was so crazy, and I got lucky, in my opinion, off of the news catalyst, that I'm good with this. I don't care if I miss anything more. The same thing with the BE. I did not expect BE to triple in price in 3 months.
Right.
Excuse me, sorry.
Yeah. Bless you. No, and honestly, I was catching up with Kelman Sunday. He put BE on my radar at 14, and I looked at it, never played it, and I was like, he's over there having a little bit of a party. But I'm in the same boat with you guys. Today, I actually booked, I had some SPY 650s, and I was looking for all-time highs. We got them this morning. I said, you know what? Didn't make crazy money on the calls because I had them from early last week. But I looked at it and said, you know what? Let me put cash on the sidelines. So my PA is sitting at about 85% cash, and I have a bunch of longer-term super spec stuff that caught sweepers. So I took the JD yesterday, see if they, but I've got them out to January. So that's most of what I'm doing here. I actually have a VIX call spread, and VIX is getting kind of froggy here. These are pricing real weird right now. So, but it's paid for, right? So a lot of what I'm doing right now, I got, I was really well positioned. I had a couple of rolls on NBIS. When I saw that news, whatever that was, Monday evening, I was like, I'm out of here. So that was kind of, that helped a ton. But I'm sitting in the same boat. I'm happy waiting. Unfortunately, client account's been an absolute disaster this year. But a lot of that has to do with sizing. And that's just one of those things,
you happen to pick the only sector that did not make money this year.
I know, man.
What sector was that? What do you mean?
Oh, man, healthcare, Jay.
Healthcare. I thought, because I know he's a gold player. I was like, it can't be gold.
No, gold, we've killed it in gold this year. And that, I think last call we did, I had mentioned, I was like, I think we were at 33 on gold. And I was like, I think we see highs. I think we go back to 35 and then some. So, pat myself on the back there. Didn't play it, of course. But yeah, man, it's just a tough year.
I got to ask. So Jay, not to
Oracle dagger in my heart.
Hold on. I feel like he's finally getting over how, his crappy year. And I'm sorry, Smiddy. Like I don't feel your pain, but I am sorry. Right. I am sorry.
Oh, it's all good.
It's not necessarily your fault, but Jay, his client had him take a $15 million position in UNH after the initial dump.
Yeah.
And then you saw that was back in May, right? And then it went down to like 250.
And then it continued lower,
right? And they got squeezed out, and now it's up to 346.
Oh yeah, and here's you can't hindsight trade it, but if we had held that position, we would have been down, I mean, an ungodly amount of money by the time it hit the lows. You know what I mean? So that was hard. And then he was in Moderna super big, right? That didn't pan out well.
Oh wow. Yeah,
exactly. Yeah. We had some big pockets, and I said, hey, let's do something here. And he was like, no, we're going to see $40-50. And I was like, I don't think so. But ultimately, I got to respect what he wants to do at the end of the day.
Well, that's what I'm saying. It's different when you're dealing with a client. It's a whole different ball game. You know what I mean?
Yeah.
It's a different ball game.
Exactly. Last year we had a really good year on that note. And then, he's got a lot of folks around him who like to give stock tips, which it makes my job so much harder.
I remember that. That's the worst.
Yeah. And, so another guy was like, oh, Viking Therapeutics. And they came out with their phase 2 data. And we were long 150,000 shares. Wow. And that thing got pretty much cut in half. So it's like, I wake up and I'm like, oh, this is, I couldn't have got out of the way fast enough. They tanked that thing. They kind of ripped it up, got some guys trapped long, and then just absolutely pulled the rug. So that was tough. It's just been one of those years that when I do the postmortem, and I tried to sit him down last week, and I was like, look, we need to, this has got to be a conversation, because I got to, make sure that I'm doing what I'm supposed to do. But it's five trades this year that have just been oversized, poorly timed, and really smacked us in the face. And that is really tough, because as we're running into, we're 20 days out from the final quarter, it's super tough when I'm doing well in my personal accounts.
Yeah, that's the worst.
My PA's up, 66% or something like that. And I'm looking at this and saying, dude, we've got an absolute train wreck on our side. But I'm trading, I'm trading very, responsibly, kind of what we talk about day in and day out in the room of position sizing, buying some time, not just barging on the 0 day, which, Joe, kudos to you guys. I know the 0 day room guys seem to be killing it in there, but yeah, it's just been tough. And when I touch base with him, he just laughs. Like, we got a position down 2.2 right now, million that is. And I touched base with him last night, and I was like, look, this does not look good. It's tied to the Trumps and some crypto shenanigans. And he just laughed. He literally just laughed.
Well, that's what I'm saying. Like, these clients, they don't care, and they want to do things a certain way, and they like to be entertained. It's a whole different ball game than trading your own money. That was the one. Right. Like, for me, like, I did it throughout the bulk of my career, dealing with clients, and then after it was all said and done, what a relief it was just to focus on myself. It was just a completely different thing. But there are perks to dealing with clients, obviously. But there's also what comes with it, and you got to deal with some of the stuff like you mentioned, getting stock picks from others, right? Constantly, you got to entertain that aspect of things.
Oh yeah.
But there's going to be up and downs with clients, no matter what.
And I know the guys that he's getting these names from, and they shouldn't be anywhere near the mouse clicking any buttons.
Yeah.
Right. So then I've got to get it. And I'm like, hey, look, I'll do every bit of analysis I can, technical fundamentals, but I look at it and say, dude, this is
and look at like one of the names you mentioned, Viking, you have you're rolling the dice and an equity name going up for some approval, right? Which is kind of a roll of the dice. And it could go either way. So you're rolling the dice regardless, and he probably is aware of that.
Yeah. Oh, yeah. And that's, the joke I always make is, hey, man, if we're going to blow this kind of money, we should go to Vegas in the high roller room, because they're going to set us up in the penthouse. You're going to have they'll bring whatever you need, drinks, ladies, the whole gambit, and we'll have a blast for the weekend. Take your plane out.
He might be doing that as well and just not telling you.
Yeah, exactly. Well, honestly, he probably is. But, it's one of those things that it's like, all I can do is I can do my best and then, give him the best roadmap I have. And whether or not he listens, that's the other thing. It's just tough being the guy sitting here actively monitoring P&L every day and being like, all right, man, I feel like, I got a quarter to try and dig us out of a pretty significant hole, but I'm not going to bet the farm trying to do it. I'm going to sit there and just still keep the pragmatic approach. and say, hey, if we get this pullback, and this leads into what I was kind of thinking, and as we're talking about rate cuts, so according to bar chart, right, and so take it for what it's worth, we've got 7.4 trillion sitting in money market funds. Right. So even if we do get a meaningful pullback off of rate cuts, do we start to see people buy the dip again and just get this continuous, higher volatility whipsaw where people are like, all right, I missed buying the dip during the, the Liberation Day. Do I turn around and buy this dip off of rate cuts thinking the economy is going to get better?
Yeah.
So.
Yeah, I think to that point, I think that's likely the case. I think what the risk to that would be a recession. Like the risk to that would be if this economy does get slippery and the Fed is really late, there probably is some pain we got to deal with. But ultimately, these corrections end up being decent buying opportunities. The last thing you want, I think, if you're a bull at heart, is for things you don't want that melt up, right? You don't want that melt up grind higher where you keep prolonging that correction, that healthy rinse, because that usually comes ahead of a bear market. You know what I mean? Like once that plays out, then on the other side of that is usually a bear market or a pretty violent, a lot of damage coming out of a correction. But if you get kind of these timely corrections, even though they're 10% off the highs and they feel like 50% off the highs to a lot of people chasing, those are all the best buying opportunities, Right. So I think no matter what, if you've made decent money, and like we said, unless you're dealing with clients, it's probably the way I'm going to phrase it. You probably made a lot of money in the market of recent. You want to keep that, raise some funds, and be able to buy that pullback if and when it shows up, whenever it may show up. Because that's going to be the next sweet spot. Like from here, in my opinion, it's only going to get more difficult than what we were seeing as far as making money in individual names, right? It's not going to remain as easy. It's no matter what's going to get more difficult. So I think you want to be in a higher cash position as that time comes. And then once we get a correction, you have the ammo to fire when that sweet spot shows up again. Because that's generally, everything we're seeing right now was set up from that Liberation Day correction. You know what I mean? Everything was set up because of that. That pullback, that fear, that shook out everybody who was long, basically anybody who was long. That wall of worry climbing on the way back is why we're seeing what we're seeing right now. So it's going to come again. We're going to get another shakeout. And maybe, 5% and maybe 10%, who the hell knows? But when that comes, once it resolves, that's the next, sweet spot buying opportunity where we can kind of get aggressive again, in my opinion.
Mm-hmm. Yeah. And what's interesting, I think, too, is I don't know if you read McElligot's note, but some of the stuff that I always look for, Jay, that I kind of learned from you is when you start to see people basically, hedge a bit more so in like volatility products, right? When you start seeing the big VIX call buyers set up, and we haven't seen that like at all till recently. There was a couple of, larger, I think there was like 133,000 October calls that were bought like 31s, right? And they're cheap. And then they followed that up and bought more. We're starting to see more VVIX spikes. That today, that was my, clue to.
Oh yeah.
It was a big one.
Yeah, big one. And it closed really big. It closed big. I think VVIX was up with 9 points, something to that effect.
Yeah. So we were talking about it, and I've learned that a lot of people don't quite understand, that particular divergence. But it was to your point. We've talked about this on the live stream, the stream in the room the other day was they've taken that VVIX divergence and they've hammered it right pretty quickly. Today they didn't. Like it didn't happen, which is not necessarily surprising given the economic data tomorrow. But I was like, okay, it's something. And today was a very weird, selly in the futures market, grindy, lower day. It wasn't something that we've seen quite a bit. Even like, Lucci, who's been doing more on the index stuff with me, he's like pretty lost. He's like, what the fuck is this? And I'm like, got economic data. There's days where I did nothing this week, right? So far, where I'm just like, there's nothing to do. But McElligott was talking about stuff that you were talking about too, of kind of at a pivot point right now, or a decision point. Like, are we going to get that crazy drop with all of that, gamma that's kind of sitting there to be unwound, not only on volatility products, but on levered ETFs and in the market itself? Or are we never going to get that? And I don't know. I don't know at all what's going to happen. For me personally, I have to have a piece of the downside. So I spend a decent amount of time either taking volatility products or, puts on the indexes. But that's why I'm really curious about what happens next week, this week with economic data, and whether or not we do get that type of sell off. And I want it. I don't like this environment where they're like, oh, now 100% rate cut and we're at all-time highs and everything is kind of, the pressure cooker is filled with potential shit that could make we could have a disgusting move down, is what I'm driving at. I don't know if we'll get it, but there's enough stuff cooking now, like you had said, with the systematics being max long, levered ETFs at 99th percentile, all these, the vol environment that we're in, which honestly, most people are wildly underhedged probably still. So
you got a huge short position in VIX futures.
Exactly. That's been the new treasury play, or the new, new bond play. Yep.
So and again, it's a matter of when you get that catalyst that tips it. The ideal, especially shorts are always difficult. We talk about this all the time.
Yeah, it's super hard.
I mean? It's extremely difficult. But if you're looking for a short, the ideal setup would be where you have kind of what we're seeing now, and you have all of positioning on one side of the boat. That's kind of what we had before. We had it early in the year before we corrected in February. Okay, and then we had the correction with the tariffs. What's missing here now, the one thing that's missing, in my opinion, is the discretionary crowd that I'm talking about, like hedge funds, money managers. They haven't really stuck out their neck yet in any major way getting long. Now, that doesn't mean if there's a catalyst, you don't get this violent, quick drawdown, VIX spike, VVIX spike. We saw one. What was that? Last year, remember there was one day where VVIX and VIX went bananas and then just sold off right? It was like a 1-2 day thing. So that's certainly in the cards. No, you don't need much for that besides what we're seeing already. There's more than enough of that. But for a sustainable pullback where there's follow through, you know what I mean? That cascade of selling, you need kind of that discretionary crowd as well, that supply to come into the market where people are getting margin calls, right? Just adding more fuel to the fire. I think that's kind of what's missing here that we had earlier in the year, we don't have now. But I think you'd be totally content knowing that even if we got kind of a short-term thing, that would get you excited, where you get, a really, because if you do get it, there's undoubtedly going to be a healthy spike in VIX, the way people are positioned there, because of that short exposure. No doubt.
They have to kill them. They haven't been caught yet.
Right.
They're bound to get caught. Like that's the one thing about this that I feel is maybe a little bit different is, do you remember a time, Jay, and I haven't been in the game obviously nearly as long, but do you remember a time where you've seen this many people short the volatility?
VIX?
Yeah.
Yeah. Much even worse than this.
Really? Yeah.
Before Volmageddon.
Oh, okay. True.
Yeah. That was even worse than this. Think about where we are now, and think about probably, I think it was another month, or maybe month to 2 months of even more on top of what we're seeing right now, where, so people were even saying they were picking up pennies in front of a steamroller, they were calling it. They were aggressively just shorting VIX like it was going to go to zero. And then Volmageddon, what was that, 2018?
2018, yeah. I was not really like full-time intraday doing it.
And then you have like vol products even break because of that reaction. Like those ETFs stopped working. They went haywire because of that move up. So we can certainly be building up for something like that. But to answer your question, there was, I can dig up a chart quickly while I'm talking and show you how short they were. Because, too, not to get too wonky here, but this is the show to get wonky. I like talking to you, Joe, because you're a wonky type guy.
That's right.
The data and stuff. So I don't mind But I want to show you.
This is when I get to really go in. Like if I was on the flow show every week, people would be like, why is this guy going so deep into this type of shit?
Yeah. You'll have head spinning on the flow show. So that's why I can't.
We should talk about a Vegas squeeze next, Jay.
But let me show you. I want to show you hold on a second. The commercial hedgers, right? So we call them Sharpies in VIX futures. Okay. And what's interesting about their positioning right now is commercial hedgers, Sharpies, are not hedged in equities at all. They are actually slightly net long in equity index futures for a few reasons. Russell 2000 is heavily shorted, so they have the other side of that trade. But while they're not hedged in equities, they are long and have been actually getting aggressively long VIX futures, which is rare to see. Like usually when they're getting long VIX futures, they are hedged in equities as well. Here, you got kind of a little different wrinkle. Here's a couple. Let me show you a couple of charts here. If I click on this, okay. Can you flip over to me?
Yep. There you go. You're good.
Okay. So this was kind of coming into 2022, the start of the bear market. So these are specs, hedge funds in VIX shorts. Okay, so here's this area. Here's where we're at now. Okay, and you see how a build up here, like I was saying, you get multiple weeks of it lingering down here. So, we're still creeping lower here. But you're at an extreme, no doubt. Here's the other thing I want to show you. Okay, so this now is positioning in VIX futures. Okay, what we're looking at is the red line commercial hedgers, which we call them Sharpies, right? That's the sharp money. Again, their number one job is to hedge, hence their name, commercial hedgers. Okay, they're not looking to get aggressively long and kill it unhedged. That's not what they're looking to do. But there are rare occasions where they take hedges off, and that's a strong signal, a strong tell that there's all-side positioning when they remove hedges. Okay, so that's kind of the in a nutshell what we're looking at in this data. Here you can see because they're hedgers, they're almost always long some sort of VIX exposure. Okay, that's why you see this red line always above the zero line. Okay, because they hedge via VIX. There are a few times when they take off that exposure and go short VIX, and that's a bullish signal for equities. Okay, strong bullish signal. They take the hedges off. That's telling you that they're positioning all sides, that they're removing even their long exposure in VIX for a reason. Okay, but you can see they've done that. If you see right here, right? So that was kind of the bullish signal the last time we were on this podcast. Right. Whatever you want to close. So here you can see how they little by little have been adding, and especially of late, been adding aggressively here in VIX futures. This is gaining long exposure as it's been getting weaker. Okay. Now look at some prior instances. Okay, they've done it here. Here they got even longer, but look what happened after this buildup. Look at that. That's VIX. Okay, so again, it may not happen now, right? It may not happen this week. Maybe it doesn't happen next week, but it's only a matter of time if this continues till you get something like this with this type of positioning. Okay, now these are hedge funds. This is what I wanted to show you. Here's where hedge funds are the green line. Here's where hedge funds are short right now, net short. Look at where they were at before this.
Oh, wow.
Okay. So
they could still double their position if need be.
So you talk about aggressively short. They were much more short here. Okay. But again, it doesn't have to, it's not that you say, oh, it's got to get there before you see a VIX pop, because you can see a smaller VIX spike, over the course of a few days. And one, it's going to be painful if you're sloppy long equities. And two, if you're looking to make a play on VIX, it's going to be profitable. You understand? So that's kind of what you're looking at right now. I think in your case, or Smitty's case being long some VIX, you'll take even one of these little VIX pops along the way, right? Based on this all sides positioning. So this is kind of where we're at in VIX futures, which adds an interesting dynamic. Let me show you Sharpies in equities now. Okay, so you can see there. Hold on. Here. This search function in the Steam room, boy, huge.
Don't worry, we'll talk about it.
No, but I'm saying it's good. It's good. Even once we fine tune it, it'd be even that much more better. But I'd be lost without it. Again.
Oh yeah, for sure, for sure.
So here's Sharpies in index futures. So this is combined all the equity index futures, okay? And this is net exposure from Sharpie. Here's the zero line, okay? So again, compare. I was uber cautious early in the year. You remember that, right, Joe? Like I was sitting in all cash. I sold even some of my trailing runners and stuff like that. That's how cautious I was. One of the reasons was this, okay? Sharpies were aggressively hedged into the highs in whenever it was, February, March, okay? Here, this go around, they are slightly long. And what that tells you is the main takeaway from that is positioning is not that offside in equities as you would think in a market that looks frenzy at times. You know what I mean? There's a lot of this market that's still under-owned. There's tech and AI pockets that are overcrowded, no doubt, but there's still plenty of the market that's under-owned that can see rotation into, okay? And that's what this is telling you here, what's different about this go-around based on what we were seeing early in the year. See, even back here, you see how they got aggressively hedged into the highs? And then we got the 2022 bear market. So this is kind of the missing link here, in my opinion. If we start seeing Sharpies aggressively slap on hedges, that's going to be a big tell for me to not only raise more cash, but to stay that way. Like, I don't like adding risk at all, no matter what's going on, if I see this in addition to everything else we're talking about. So that's what's missing. I just wanted to show you what I was referring to, what's missing this go around that we kind of were seeing earlier in the year.
Yeah, that makes sense. That makes complete sense.
Yeah. So again, like Smiddy was hitting on it too. There's cash out there. Like, here's the way I'm looking at things. Like, I get it. AI is where all the sexy story is in this market, and for good reason. Okay. And I think if you see new companies, right, especially us who are watching the flow, you see new AI related name catching aggressive sweeper activity. You should participate if you like it. But for me, I think the opportunities are elsewhere right now, like where nobody's involved. Because I think even if you get a correction in some of these hot pockets of technology, it's only a matter of time before that money starts to rotate into these other areas that are under-owned. You understand? We're kind of seeing that with the Russell, right? I think because you've been more in the zero day, but you knew I had a pretty aggressive TNA position. You were aware of that, Joe?
Yep,
I think
TNA, you're in TSLL, and I actually played the Russell this morning off the open. I got long and took a nice little scalp on it. So
yeah. So TNA is obviously the levered ETF for the small caps, and the reason I think it's R2K. I search it. The reason why that was kind of that was my largest position. In everything, even in names, was because even if AI corrects, positioning in the Russell was so lopsided. Like, you had a market at new highs and people wondering if the run is over, and you still had aggressive short exposure in the Russell 2000, which is ridiculous. So here is Sharpies. Now, this is updated as of last week. Okay. So Sharpies, why are they slightly long equity index futures? Because look how aggressively long they are in the Russell 2000.
Yeah, okay? They caught the whole move.
They caught the whole move, right? And here is look at hedge funds, how aggressively short they were. Okay, so even bullish players out there who were bulls, what they were doing were buying tech and AI and shorting the Russell to hedge, even if they were bullish on the market. So they all got caught here, and that's why you're seeing kind of the Russell play catch up and participating more of late. But now it's starting to unwind. You see how it's starting to curl back now, and probably on Friday we get a little more curling back. So that's why what I've been doing, I was in the TNA And I've been moving some of that TNA exposure into IWM calls with time. So I'm kind of taking a little of that aggressive principle off the table and moving it into something longer term that I can survive a pullback in. You understand?
Right.
But then, that's kind of what's left in this market. I think if you squeeze out these shorts, you get Sharpies now hedged in index equity futures overall. You got to set up there for a legit correction. Like that's kind of the missing link, I think, out of all this. But while this lingers, you probably will see money rotate into these areas, even if AI and tech kind of pull back. And that's what we've been seeing.
Right. No, that makes complete sense to me. I mean, I like it too, because McGilligan was talking about it. He's like, man, if they continue the squeeze and we get that Goldilocks, event that you were kind of talking about.
Oh yeah, on IWM, yeah.
Yeah, Russell squeezes, and they said the 3-month median return is 13%. That's significant.
Yeah,
that's very significant. I don't know if you've played small caps at all, Smid. I've only been scalping them because I'll be quite honest with you. The easiest trade so far for the last probably 3 weeks for me has been when they get aggressive off the open buying the Russell. There's usually a really good momentum play. Now, they don't necessarily sustain it all day. Right. I don't give a shit. I care what they do for the next 3 minutes.
Yeah, you scalp it. Yeah.
Scalp it. And that's been a really good trade. I just listen to the tick strike they go, and I'm like, yeah, they usually sustain this for a couple candles and get out. But it's been really, it sounds so stupid, but it's been really easy. It's been a really easy trade.
No, you hate to use that word easy, but it's definitely over the past couple of months, there's been easy. I mean, have you seen, and I think, again, I'm thinking about the podcast where we talk, have you seen, you talk about small caps, that's my baby. When the small caps get involved, and because I like playing the equity, that's where I pick up all the money. Again, when the mega caps are rallying and people are salivating over NVIDIA, Tesla, I'm grinding it out. That's not really my environment. But what we've been seeing the last, maybe month or two, look at am I showing screen?
Yeah.
Yeah. Okay. So you guys remember, I've been playing these a lot, these Bitcoin miners, but what's been interesting, the flow, we've been seeing a lot of positioning in these names. And the reason why is people think it's a Bitcoin play. It's not a Bitcoin play. They're now AI power plays. You're seeing all this news, NBIS. You're seeing, what was the other one? APLD, CoreWeave, the cores. What's another one that caught big news? HUT, right? Quite a few of them. So look at these names, though. Here's the beauty of it for me, okay? You got a name here catching sweeper activity, right? Now think about it. The market's already rallied. You got a lot of mega caps already are up huge, okay? But now money's starting to rotate into the smaller names. And you got a name here that, look, hardly has come off the lows, right? Has done nothing. You see aggressive sweeper positioning call side coming in here, and then boom, they pop like popcorn. The beauty is they're $3-4 stocks. It's a call buy, right? It's like the premium for a call. 10,000 shares, 30 grand, 40 grand. I mean, again, I'm not trying to sound but that's peanuts, And you're seeing stocks go from 4 to 11 to 15 to 20. That's big money, man. That's big money. And the beauty of it, I explain to people, it's like buying a call option, but less risk. Why? You're buying, let's say, front month, a $4 premium on NVIDIA. NVIDIA takes a shit the next day. That $4 call is going to zero, right?
Yeah, you're torched.
Right. Wolf is not going from 4 to 0 in a day. You understand? You can manage your risk a lot more effectively here. And I think that's the risk-reward side of things that really made these things so appealing. But now look at them all. Look at this. The Wolf, HUT. I mean, I literally played every single one of these things, Joe. Every single one. I wish I held them all. Obviously, I wasn't going to do that. But look at this. HUT. Look at this thing. 16 to 32, right? I mean, they keep going. How about this? You remember Irene? You remember this?
Yeah. Yeah, Irene Tits.
Okay, look at the circle. It's still up there. Look at this.
That's gross.
It's 34.
And I don't even know what they do.
They all the same shit.
All the AI power shit.
Yeah, it's all AI power related. Here's another one, Cypher. All these names, again, that was it was obvious. Again, I hate to use the word easy like you, but it was just an obvious lagging theme out there that really didn't get attention. And then once the flow started to build up, you could just see it happening. But now these names, you look at them, and what do you do with these names now, right? I mean, here's your BE. Look at this chart. I mean, look at this. Here.
Where you circled? Where you circled is where I got in before that, actually.
That's where you rolled, I think. Didn't you roll?
Yeah, it was the first roll was when I think I got up to like 26 because I was in the 22 calls because they would just bought them. But I took time to buy them because I bought them for November, right? I bought them with time.
Those were the ones they bombed, I think, November calls, wasn't it?
Yeah, they went in crazy. They kept adding. And that's when I was like, all right, I'm going to be like Jay. I'm going to go buy this shit. And I don't know anything about them. I don't give, and I don't really fucking care, in all honesty. And it just, the move, though, I'll be honest, I did not think it would sustain like this. So even when I was rolling, I was rolling and taking size off the table. Yeah. Right. Like I think my last roll now, I'm sitting in like a position that probably cost me like $5-6 grand. Like we're talking 5 contracts, right? Like I've really lowered my exposure down because I have no interest in holding this name for a long-term play.
That's the smart way to do it though, anyway. Because, listen, there's going to be a point where they correct, and a real correction, they're going to come in. They're going to come in a decent amount. And with options, you're going to, the money goes quick when the momentum goes. So you got to take chips off the table. How about this? This is probably, again, I don't know anything about the company, but the way I look at it, one of the biggest pieces of garbage within the group. Like, this is the last name I wanted to buy out of all these kind of power miners. I bought it recently, and I'm still holding December call. I had equity. I moved some money into the call to get out of it. Look at this. Right.
For Riot?
Yeah. Look at this. Yeah. Explosion.
I'm with you there. I rolled my 14 calls.
You're in the Riot too? Yeah.
I rolled 14 calls to 18s for December, and now they're paid for. So I'm going to be hanging out in this thing for a little bit.
Yeah. So, I mean, again, going back to the point, it's just when you get the participation, the small cap, mid cap participation that we've been getting, individual names, that's where the money's at. That's where the money's at. And we haven't seen that in a while in this market. So, again, we'll see. It's going to be interesting when that correction shows up to see coming out of that correction, do we see money go, right back to these mega cap names and they lead, or do we see a different wrinkle where we see some of the other stuff, get bought up quickly? So that's what's going to be interesting. But now you got all these names up hundreds of %. And you can't do anything with them here. You can't put new risk on up here. It's ridiculous. It's ridiculous. Let me give you one I own right now. Like, this is my little baby right now. Because again, I'm raising cash. I'm trying to be a lot less aggressive. I'm really, and it takes, believe me, it's not easy for me to kind of rein it in when names are acting like this and not look to buy stuff when there's stuff to buy. Okay. But so here's a name I bought recently.
GoPro.
Out of it. Yep. And I'm in this right now. Dave, and again, the stuff I'm buying right now, just to let you know, and that's kind of me being conservative. The only things I'm buying is anything new that they're tattooing. If they're tattooing it, I'm willing to lose money in something they're tattooing from this point. You understand? I just don't want to buy anything off old flow and rolls. Okay, so GoPro, and they started here. GoPro, they come in and they start just annihilating April calls. Okay, again, they're getting into more AI. I don't have a clue what they're doing. Okay, but you remember GoPro, the cameras, everybody remembers it.
Oh yeah, of course, of course.
This thing has been, some people forgot it even still trades. Look at this thing. Okay.
Yeah, I haven't looked at GoPro. It's the same thing like Kodak when they were buying Kodak.
Yeah. So now you got GoPro. They're coming in and hammering April calls. Pop. Okay. A little flag here. I was still in. Nothing crazy. I had a decent position, but nothing crazy. And then here again recently, they hit GoPro even harder here. So I added a little more, and I'm okay losing money with GoPro off that action. Like that's the approach I'm taking now, is that if these sweepers are going to bomb something and it's going to cost me a piece of my profits, I'm okay with it. But that's solely what I'm looking for. I'm looking to play the most aggressive buying that's out there,
Right. Of course. Well, that's all you can do now too. If they keep coming in at tattooing, because you've gotten the pop. The worst ones that I've been watching, and Lucci trades these, and I just can't, are the crypto-treasury pops.
Oh, those guys. What are some of those symbols there?
Like those are next level, like insane. What was the last one we just got?
Is that QMMM? Oh, there are some crazy
QMMM.
That's a QMMM. Yeah, those are nuts.
Oh, yeah, look at that thing. It got up to $300.
Come on, man, that's ridiculous.
Like that's just insane. That's why they're cracking down, though. They said they're going to come out and they're going to change the rules. So I think everyone's trying to get their crypto treasuries, going. Actually, Jay, not to switch gears completely, but I wanted to ask you something. I want your opinion. I tagged you in this on Twitter, but I don't know if you ever saw this.
Oh, I saw it. I hearted it, or favored it, whatever. I saw it the next day.
The tokenized.
Yeah.
On the NASDAQ.
Somebody check on Jay's health, right?
Somebody needs to check on Wall Street Jesus.
Yeah.
What do you think about that?
I mean, this is turning into, if it's not already, it's a full-fledged casino out here right now. It's nuts. It's nuts. Like all these things scare the living daylights out of me. These names that all they do is collect Bitcoin and Solana, and this is Tom Lee's name. This is when people talk about like bubble and they're worried about things. This is the stuff that worries you. This is the kind of action that worries you. This stuff like this, but doesn't mean that it can't last. It can't linger for a while. But I'm not buying them. I'll trade. Like, let's say, for example, I think I traded here, BMNR. It actually caught some action here, and I flipped it. But I'm not holding any of these things. I'm in and out of them, and right now I'm not touching any of them. Because they could go higher. I'm not going to get any FOMO off QMMMs and these type of names, because these are all manipulated, crazy stocks. These aren't the type of stuff I look to.
No, I'm just going to be super curious what happens if this passes through, and it probably will. And they actually have, I think they're calling, I don't know what they're calling. I think they're called ETPs now is what they're going to try to call them. Smitty, if you looked at it, like tokenized stocks.
I haven't looked yet. Yeah.
So, dude, they have a proposal out, basically, for those that don't know what I'm talking about. I messaged this to Jay, where the NASDAQ has filed a proposal with the SEC to allow tokenized stock trading. So think about how you'd buy cryptocurrency. I don't even know what that means.
What's that mean?
So it'd be like you can use your crypto wallet to go buy shares of a stock through the blockchain.
So you can use crypto instead of actual money, right?
So I'm not sure how they're going to do that part. I don't know if they're going to have your own wallet to do this, but they're literally talking about how I would go out right now and buy Bitcoin and doing it for stocks. Now, this isn't new. Smitty knows this. There's companies that already do this, like underneath I wouldn't call it underneath the table. It's just like there's no regulation, right? So you can. Yeah. It's like a mirrored product, right? Similar to when you got Bitcoin before we had the full-on ETFs. We had like the other Bitcoin ones that would try to look at the price of what it is and like future values. It wasn't like a spot based, like we own the asset ETF like you get now with like iBit and shit.
Yeah.
So I'm not sure exactly how it works, but they're talking like you get voting rights, you get everything. It's all blockchain based. The problem with this, Jay, if this does go through and becomes a thing, is it opens up the casino to the crypto heads that don't want to deal with, whatever they have to deal with the regulation side, right? Smitty probably has some thoughts on this because I'm curious because he is a degen from the crypto space.
The crypto boys got to put down the fucking Pepsi can that they're smoking crack out of, dude. It's never happening. I'm sorry. Their Overton window has closed. I'm happy for everyone making money. I made plenty, but no, how are you? Easiest question, right off the rip. How are you going to KYC these wallets? Because most of these guys who have any kind of meaningful money don't want to KYC at all.
There's a point. I don't want to pay taxes.
You know what I mean?
Yeah.
And then at that point, if you're not going to KYC, you don't have voting rights in a public company. Sorry, dude,
Right.
we got to keep a record of who's actually voting here and why. And what you win. You know what I mean? And then let's just break it down a little further. What happens when there's a dividend to pay? Who's gonna settle that? Where's the clearinghouse? I mean, dude, it's a whole disaster. And I've thought about this, you know, very much through and through. Like I would love to see it work. I just you know, and I just actually lost a buddy. I found out yesterday that he had a crypto fund and actually gambled the entire treasury away on fucking meme coins and killed him. Dude, and then killed himself. And I'm like, well,
oh my God. I thought you meant it facetiously, not the.
No. It's he full blown like had some pretty big backers and gambled away the funds. And then I find out, you know, through a good friend of mine, he's like, yeah, you remember so and so? And I had some calls with him because they wanted to onboard us as clients, and I declined.
What was he, a young guy? How old?
Yeah, he was, I think, 22 or 23. So he might be 24 now. But yeah, man, young kid. He was a bright guy. But I think that he probably was like, all right, I've got all this Ethereum and Solana. I'm just going to go. I just got to hit a quick 10X, and then we're going to
the way they look at it. They just want the quick score, right? And
it's a casino, you know. And so I think I don't love these treasury companies. I really don't understand it. It reminds me of, and I'm sure you guys have spoke about this, but back in the day, you know, a couple of years ago, when everybody was changing their name to a blockchain company. Yeah. And now you're an AI company. And it's like, now, hold on, it gets better. Now I'm a crypto treasury. Yeah. Why not just,
very symbolic of the late 90s when every name was adding .com at the end of the name to have internet exposure in the stock market. And that was kind of, a couple months before that bubble blew in March. So,
the whole thing blows up. Right. Yeah, and so I have a hard time with it because I don't, at the end of the day, what happens when the guy comes in with $1 million wallet, right? Let's say crypto billionaire, he comes in and says, all right, I want to buy 5 million of each of these tokenized, shares, right? So I want 5 million Tesla, 5 million Apple, 5 million Oracle, buys the Mag 7 with 5 million clips of HOP. Who's providing that liquidity? Are they going to actually have that much liquidity to provide for this guy?
Because Joe, the part I don't know. Yeah. That's the part I don't. I don't even know how they're going to do the transfers of all this, how it's going to work. And then again, I think there's going to be more information that'll eventually come out. But the one thing that I don't think people take into account is these crypto dudes. To your point, the KYC and all of that, right? Like, sure, I agree with you on that completely. Like, they're going to have to KYC if they want to do it. But these crypto guys are fucking nuts, man. I'm telling you right now, they will find a way to not necessarily attack a system, but they will find a loophole or something that's going to fuck shit. Right. That's what they do. Like, they find loopholes and they steal people's shit. Yep. Exactly. Then you add in the ability now to scam more people. Like, crypto scams are already there. Like, oh, I need your wallet. I got to do this, for the non-knowing person. Now, again, if they do this where it's just like, hey, we're just trying to have a settlement layer, added to the NASDAQ book to try to make things faster or whatever it is. And this is not necessarily like, oh, I have a phantom wallet. I want to go buy blah, 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 blah. Like, I have MetaMask. I want to do this. It's like, no, you still have to have an account registered with the broker. And that's how it's going to be handled. Then this is a different story and conversation because it won't be as crazy. But if they legit go the crypto route, I just don't. And I'll say this too. I know we have the futures market that trades like crazy. I do not want to live in a world where at any point in time, 24/7, people can fucking trade the markets. I just don't want that. I don't want that. That futures is enough. I don't want to be in a world where some fucker, like you had said, has a wallet, buys an ass crack ton of this, and then at 2 a.m. he goes, fuck it.
God, right? Liquid names.
Right. Like, they're just think about what you can do. And exactly, Jay, think about what you could do with illiquid names. Oh, like the GME shit. Imagine just a bunch of guys that get together and say, yeah, I don't care if I KYC. I'm going to move a couple, $10 million into this. And we're going to pump a 50-cent stock tonight in our Discord. And they do it on the tokenized shit. Like, again, I don't know how this is going to work. I'm just thinking of all the worst case scenarios that you could possibly have. And that's the first one that my head goes to.
Yeah.
I mean, Joe, here's my thought too. Again, how long did it take us to go from T-2 to T-1 settlement on broad exchanges?
Yeah.
Right. I think that even the most progressive, chair at the SEC is going to say, look, guys, we really got to think this through and do the math on infrastructure. I don't think it's happening anytime soon. You might have some, fly under the radar kind of broker that tries to do this. But again, I think, and this is just my thought, that would be something that you build, you show proof of concept, and then you go sell that to a Robinhood. And you as the builder, who gives a shit if it works? I'm going to go make that $10 million check from Robinhood, building the idea, and let Vlad and team see if they can make something of it.
Quick story. I will tell you this. That was, so when I worked for Jay, I worked in crypto, right?
Yeah.
Okay. So the last company I worked for was like kind of like a chain link, right? So they were like a data oracle. So think of it as just like a data provider, Jay, right? Of here's the spot price of Bitcoin. Here's this, here's that, right? Just you plug in, we like send the prices out live, like from an API, same way you'd see it on TradingView. And there was other stuff obviously mixed in. But in the crypto space, they're very anti legislation, anti-tradfi, anti all of that, right? They don't like traditional finance guys. I sat there in a meeting about 3 years ago in New York, and we were talking about what we need to do. And I kid you not, Smitty, I have this written down. I had a 1-page proposal that I wrote saying that what we should do is actually go to all of these big fucking companies, the Fidelities of the world, the Schwabs, right? And like literally offer our data, providing services to them if they wanted something. But the other side is ask him what they're trying to do and go fucking build it. And that's it. Because they're not going to have a clue how all this works yet. And they're not going to probably put the resources to it right away. But the TradFi people are coming. They are going to take this over, especially if you get a crypto pro president, right? That was my entire thing. And I had all of these guys that are big crypto heads in there fucking laugh at me and tell me that's the dumbest fucking idea ever. Fuck traditional finance, blah, blah. I go, are you trying to build a business or not? Because if you are, what you need to go do, and again, the proposal that I had was a lot more in depth of what I wanted to actually do. But I wanted to build tooling for them to have access to the blockchain and like become a settlement layer, right? That was the idea. Like we're going to provide the data. We're going to start, we'll partner up with some of these other layer 2, layer 3 companies on Ethereum or whatever network we decide to do, right? That was right before Coinbase came out with their base product and stuff, right? And we were talking to them. I'm like, let's do this. If we could partner with a Coinbase and be data on this, and then we can go to Fidelity and be like, do this and that, and you have this whole thing and you build the entire back end for them, it makes perfect sense. And they're coming in.
You didn't want to go that route at all?
No, and the company folded 6 months after that.
Yeah.
And it was these Harvard MBA kids who were 26 years old who didn't know what the fuck they were doing.
Yeah,
they raised $7 million without even a deck. Without a deck. That's how easy it was to get money back then, Jay. Yeah. I kid you not. People just threw money at you. I had people throwing money at me to build a video game in the blockchain space. And I'm like, it won't work. But if you willingly give me money, I was like, I might consider it. But I also didn't want to like ruin my name. Yeah. So it was like a little bit of a different thing. Like, so anyways, that's my whole thing. And now they've come in, right? They've built these ETFs. They're buying this shit up like crazy. I mean, my favorite thing ever was when, then this is what they used against me. The Harvard guy goes, well, Jamie Dimon hates crypto. I said, do you think Jamie Dimon is not accumulating fucking Bitcoin right now? You're an idiot. I was like, he's going to say it sucks as much as possible to get the price to go down. He's buying.
Unbelievable.
Like, you guys are naive as fuck if you think these guys aren't going to buy it. Why? Because the market isn't regulated and they could do whatever the fuck they want. And guess what? They have the biggest pocketbooks of all time. I was like, just wrap your head around that. It's not a crazy concept to think that traditional finance will own blockchain one day. And look where we're at, right? Like, and look how smart they got. These QMMs, these other crypto-treasury names, right? These guys pump their fucking bags, sell the living shit out of their stock when it pumps, and collect the bag and get out.
Yep.
Yeah, it's brilliant. It's brilliant. Low float pump. It's brilliant. It really is. And it's really fucked up because I want to know ahead of time before they do that.
I mean, anyway. I've seen it like, and you hear anybody who's been in the market, you've seen like the internet days of, you saw the same shit. It just, at some point, it's all going to end badly. The thing is this, like, and this is the main thing. We haven't had a recession, like, to see the true colors of all this. Like, usually it's the recession when people start losing jobs. That's when shit hits the fan. That's when you find out who the criminals are, who's been robbing, stealing, scheming, who's going to jail. Like, I thought we were there in 2022. Miraculously, we've somehow come out of it unscathed, no recession. Once we see a recession, I think you see the true colors of all this shit. What's going to make it through, what's not going to make it through. While liquidity is where it's at right now, there's so much liquidity out there. People can do whatever they fucking, and like you're saying, there's no regulation in these things. So they do whatever the hell they want right now. I mean,
Trump has his own coin.
I was just going to say, you got the own president trading this shit. So it's crazy.
Yeah,
but
it's unbelievable how this could be. But I agree with you because, and I, for anybody that would live through 08, I think I was in high school at the time, but, Jay, you obviously were trading it during that time, and saw it. But my favorite thing was I studied that. Like that was a big thing for me, was kind of studying the financial crisis and, from reading stuff, reading economic reports. And the deeper you went, the more fucking corrupt you realized how it was. You had economists saying how great everything was because they got paid to say how great it was.
Right.
And then the bigger one, my favorite one, was when Michael Berry and all those guys, and this is in The Big Short, and it's actually true from what I understand, but when they went in and you had all of these mortgages defaults, they had swaps.
Yeah.
And they wouldn't price them correctly, right? Yep. Because, it's a complex product until they got a net short position where it was in their interest
they needed
to price them properly so they can make money. Yep. That is the type of level of criminality that is already, I mean, it happens all the time, but I think we're already there. And I am, as much as I don't want a recession because it's bad for the American people, right? Mm-hmm. And my selfish interests don't need to go down that road. But I am genuinely curious to see what the next catalyst will be to lead to that, and then how much criminality gets.
Yeah. And that's usually how it happens. When it could be the tech bubble sets it off. You know what I mean? And that blows, and that's the catalyst. But it's only a matter of when. Like this shit doesn't last forever. It's been a long stretch. But you think the 90s was even a longer stretch. Even a longer stretch. Like I remember people talking about a tech bubble throughout the 90s. It made the internet in 99 made it all look like it was never going to end. And then once that popped, it was all over. But see, getting off the topic a little bit though, even if you get like a tech bubble, like even if there's pain, and there's going to be initial pain when it blows, tech is going to take everything down. But once that initial shock and that initial pain is absorbed, you start to get money moving elsewhere. Like people don't realize, I talk about it all the time, a little too much. Post 2000, like starting 2001, you had bull markets under the hood in sectors that nobody even knew what was going on because all they owned was tech and was getting buried in all these internet things. You had housing stocks going nuts. You had small caps going nuts, full-fledged bull market. And I think we got something similar here now where you got a big portion of the market. Like, Joe, you ever wonder, you look at stocks, you're like, why is this company, it's a blue chip company, why are they even public? This stock has done nothing over the past 10 years. Nothing. You know what I mean? And what happens is when the hype stuff blows up, after that initial shock, you start to get rotation into all that other stuff that's been, nobody even knows is around anymore. That's cheap. So that's going to be the interesting dynamic once it blows. But I'm on your page, like, I'm fascinated to see what that catalyst is when it happens, and what it looks like. Oh man, it's gonna be one for the ages, though.
I know, especially with, again, I don't know the timing is gonna come, but I went down a rabbit hole, and Smiddy knows about this, like probably last year, because I got sent kind of a report, it's probably a year ago, about like synthetic risk transfers, I believe is what it's called.
Oh boy!
And for the long and skinny of it is basically these banks. And apparently this has been a thing for a while. But it was an article I read in the Wall Street Journal. And basically what it is you have these banks that are, in order to get risk off their books, paying like hedge funds and other stuff, or whoever it is, other areas that have cash, to buy, the risk. Now, the best part is the way they get paid on this is they get paid like, we'll call it like a loan, right? There's a percentage they get paid to take the risk off the books. However, the asset never transfers. So let's say like it was like an asset, and I don't just for lack of a better choice, like a house. Let's say the house is worth $500K, right? And the housing bubble collapsed. The risk is not on the bank that owns that shit. It's on the person that they transferred the risk to, and they were getting payments to hold that risk on their books, right? But if the housing value goes up, their profit is whatever the net difference is between the value of that home plus whatever they paid to get the risk off their books. So I'm sitting there, I'm like, all right, hold on. Let me just take a step back. I'm like, you're telling me that if a bank or somebody else has too much leverage and they have to de-lever their book or lower their risk, they can just pay someone to take it, but they still own the underlying asset? It's like, what the fuck are we doing? Like, I didn't know, and I went pretty deep into it, but I was like, this is on a whole nother level of shit I probably should not wrap my head around, because that made me so bearish about the state of the world when I was reading this. And I'm like, this probably won't matter for 10 years, right? Like it needs a lot to build up and blow up. But anyways,
well, it's gonna matter. All of it's gonna matter. And let me tell you something. I promise one thing. Okay, and I don't like to make predictions, but this is something I feel pretty safe about making a prediction because it's not on time. But all kidding aside, when it happens, it's, oh my God, bro, it's gonna be ugly like you never seen. Like, honestly, it may look like 2008 look like nothing. The speed of it, because of options now. think of it. Options. Nobody was playing options like they're playing now in 2007. Options were, you have to know what you were doing to dabble in the option world back then. Now, with retail and options, the speed and velocity when it breaks to the downside is going to be breathtaking. Mark my words, breathtaking.
I agree.
You're going to see S&P 500 3 digits in, like, you know what I mean? It's going to happen so quickly. And
I'll add this: what they didn't have before that they have now as well is there are more ETFs than individual stocks.
Oh, that's the other thing. ETFs. Oh,
right.
ETFs. When
you add in those levered ETFs, and this is what McElligott talks about, all that synthetic, gamma.
You see that chart? He keeps showing that.
It's 99th percentile. We've never seen this before, and it doesn't matter.
I think that's the scariest chart on the street. No matter what, even if it doesn't. In other words, it doesn't have an impact now. No matter what, that's the scariest chart on the street, hands down. Hands down.
And a lot of people don't understand that. Like, that's what I was talking about. I'm like, all right, well, look at Jay. I made this. I talked to this on the 0 Day Room broadcast. I was like, for those didn't understand this, which is Lucci, obviously. I was like, look at Jay. I was like, when Jay takes an equity position in something that he likes, like a lot, he plays the levered ETFs like TNA, TSLL, right? He wants that leverage on it. I was like, think about how these work. If you're not buying Tesla, right, and you're buying TSLL, right, it's a 2x levered position from the directional movement of Tesla for the day, right?
It's not 3x on some of them, but go ahead.
Right. I was like, okay, so think about this. If the stock goes down or the stock goes up, they have to rebalance how they're positioning. Like that's what they do. So I was like, think about this. If you have all these people gassed up in Tesla, all these people gassed up in the 2x, 3x long directionals, and all these levered ETFs, I was like, think about how much more fuel you have that has to unwind. Like, that's the whole thing that I was looking at. I'm like, this, and I agreed with you, Jay. It's the same thing. This is the scariest thing I've ever seen. And I haven't been in the game nearly as long as you have. And I'm like, when that shit goes with everything else,
that's the stick of dynamite that's going to just set things off. Like like we couldn't even imagine. And you've seen it at spurts to the upside. Like, people don't realize how much
same thing.
The part in the upside. But when it goes the downside, is people are going to poop their boomers to the downside. And
I'm waiting for that day, because that'll be a great day.
Yeah,
it's not an easy trade. But it's not a great trade, but it'll be a good day.
The tough part is betting on when that time will show up, but it will show up. I promise you, it will show up. It always does. It always does. You know
what I've been doing, Jay, that I think you would like is I've flipped my strategy for like these shorts that I like to put on for the indexes.
Yeah.
And what I've been doing instead is, like, when VIX or something gets into an area of, like, not necessarily a floor, but like an area of interest from my end, or then I start seeing people buy the VIX calls and all that. Like, I'll play, like, you VIX-y, sometimes VIX call spreads, but I'll mostly play the indexes now. But I changed how I do it. Instead of me wanting like the crazy pull that goes down and I have time on it, it's like I'm playing short dated. I'm gonna get my pop here and I'm gonna get the fuck out.
You're not looking for the big move, you're looking for the quick move.
Right. And what I've changed now is, like, if the move comes and it's sustained, and it looks like it's gonna sustain, which is the hardest part, I'm like, I can always roll that short dated shit and catch the move. But
Yes.
I now don't have to worry about the timing of it
Exactly.
because I don't care if I lose on the initial part. What I was doing before was like, all right, I'm going to go 6 months out and buy puts. And then I get
Right.
fucked when we don't do anything for 3 months.
Yeah, no, that's the
Across
difficult
the
part.
board.
That's impossible. That's impossible.
Right.
But listen, Lucci, this is one thing like Lucci that I've seen that very few can do. And I'm being dead honest. When Lucci plays the short side, like he'll short any little weakness he sees, okay?
Yeah.
But he does that and he uses that, like he gets excited about it, but he almost uses that as a feeler. You understand? Like the majority of times, it's not going to work out. There's no follow through. You understand? And he'll complain about it and he'll get trolled for it, whatever. But when it does, see that, that's when he sizes up ads and he catches that big payday, right? So that's kind of to your point. Like instead of predicting when that shows up, react to it when you see it, right? When you see it actually confirmed, and you got a better chance of catching it that way. But not many people could do what Lucci does, where they're willing to donate money to try to catch that larger move. That's the one thing about the short side. You have to be willing to take these little paper cuts to be a part of that bigger move. If you don't do it, otherwise you can't. You can't do it. It's impossible.
You just did it on, let's see, if I go to that last day that we had, one of those other sell days that we had, Lucci just did that where, what was it? I think it would have been on that Friday to that, maybe it was that Tuesday. I don't know. But the long and short of it is
that's the only way to do it. And not
donated.
How much?
He donated, I think he lost in order to feel it, like 150 grand.
Okay. Now I'm not doing that, right?
No.
You're not going to want to do that. And not many people listening are going to want to do that. You understand?
He donated 150 grand to make 1.4 million is basically what he had.
Well, there you go.
I can't. I look at that and I'm like, no chance.
Yeah, well, one, you gotta have the conviction that you're capable of catching it, and it'll make up for the losses. It's almost like kind of what we do on the long side, but on the long side, it's easier because the market goes up more than it goes down. So you got probability on your side. On the downside, you have probability against you. That's what makes it so difficult. So you got to take a number of paper cuts to catch that one move that ends up showing up, and it's just a lot harder to do. Not many people could do it. That's the problem. Not many people could do it. And then here's the other part, okay? And this is why the short side, I throw it out the window. We just talked about how difficult it is to catch it, right? That's one thing. Now, what about the ability to transition now and get aggressive on the long side when that time comes? The problem is with bears, even if they get paid on the downside, they never transition to get out of the way on the long side. Forget about even getting long. They can't even get out of the way on the long side and get run over. You understand? When you build up a bearish bias like that, you don't want to get off that trade for nothing. Nobody can convince you that it's time to turn, right? Nobody can convince you that bias is so strong. So that's the number one reason I don't short is because of that. I would have a tendency to build up a bearish bias, and then even if the signals are signaling bullish to me, I don't want to hear it because I'm making money on the downside,
Right.
That's the big problem.
And I flipped on a lot of the way I do it, right? Like even me, unless if I am shorting something and all that now, like I'm doing an intraday, right? Which doesn't really count in the grand scheme of things. I'm playing off of
that's different. That's
different game.
Yeah.
But what I've learned now is like I legitimately I really honestly wait now for a McElligott to come out and be like, all right, this is my back tested data because I love that shit.
Right. And
this is your probability over the next one week, 1 day, 30 days, 2 months.
Yeah.
And he'll be like, we like the idea. He doesn't tell you exactly what to do, but it's like, okay, now I have a thesis. It's a back tested for me. If my win rate's 85%, I'm going to put that shit on, no problem. And if I lose because it's one of the 15, I don't care because I'm going to take it every time. So probability now is on my side. And usually his plays as of late, obviously, because of what's happened in the markets, they're downside plays, right? They're buying VIX calls. And they're talking about buying VIX calls outright, which is crazy to me considering you get killed on them and the pricing of them is so weird. But, anyways, I digress on that. I want to, first, obviously, Jay, thank you, obviously, for coming on and talking shop.
Oh, my pleasure.
I have to pivot now, and I have to force you to potentially take a short in a fictional environment.
Oh, here we go. I like this because this is
So
where
we're
I
gonna
get
play-
my short fix here on this.
Yeah, we are going to play trade or fade.
Okay.
And I have two plays here. Two will be shorts, one will be a long. So you remember how we do this again for everyone listening. This is not real.
Yeah, and again, for the record, I think my short got completely run over the last
Yeah.
time. So keep that in
Jay did
mind.
not do so great on his picks last time. Smitty and I have been on a not so great streak either. So we are going to play trade or fade. I have the three names here. The first one, and I'm going to share my screen for those that are going to watch it here on YouTube so they can see the chart.
Yeah, let me go to that so I can see it. Okay.
Oh, wait. No, that's not what I wanted to do. Why the fuck did it do that? Hold on.
Where are you on me? You want me to show the chart?
No, I got it. You're
No.
good. This one right here. All right, there we go. The first one I have, and I'll kick it off to Smitty first, is actually going to be a long. It's MSTR
Oh, this one again.
calls. Yep. 919 is the expo. So this will be by
Okay. Next
end
week.
of next
Next
week
Friday.
at OPEX. They're 352 and a half calls.
352 and a half. What do we got
MSTR.
here? Honestly, dude, 352. That's a bit out there. Let me see.
Yeah, there's a decent amount of premium on this line. So
352s, man. I think I would probably fade that one. I think Bitcoin does look good to retest probably 120 here, but again, you got what? You're gonna have the Fed rate cut in between that. So
Yeah,
I mean that
Yep.
well, yeah, I should say presumed rate cut. But man, if they go 50 and everyone gets excited and they buy Bitcoin like lunatics, that could happen. But I'm gonna fade it. I'm gonna fade it regardless because that's a pretty nice size move.
You gave us the bullish thesis and then you threw us.
he's out. Smitty says,
Exactly.
I am not taking him. I'm not
no
either.
way.
I'm not either. But that's just mostly because fuck MSTR.
Yeah, me too. I don't like it. And if the Fed cuts 50, I think the market might shit their pants thinking the Fed sees something they're concerned about something. So that might be a bad thing. But MSTR, I just think the momentum's dead in this thing, you know? I mean, at 352, it can get there, but this thing's just dead money, in my opinion, overall.
Agreed. So we're all fading MSTR.
Oh,
Yeah, the premium's not bad though. So
that means all of you, if you're listening
I'm buying
this
them
time,
tomorrow.
go buy calls because we
you
don't
guys
like.
don't realize that's what I do. When everyone's bearish on one thing, tomorrow I'm going to go get long immediately. So.
Jay likes it now. Now he's like, yeah, I definitely wouldn't take them. Tomorrow we find out. I got 10,000 shares MSTR. Now I'm going to make you.
It's not bad though, man. The premium's not bad. It's $2.45. So you know,
We're going to go over to Steam Room favorite
Okay.
APP.
Ooh, that's been a
And
good
we're gonna start with you, Jay. The APP puts, they are puts for 9/12. So this is for Friday. 555s
555 for next Friday.
for this Friday.
Oh,
2
this
days.
Friday. Oh,
2 days.
man. So wait, 555 puts for
For
Friday?
this Friday.
555 puts. So, damn, I don't know. This thing's a bit extended here. But I'm going to say it stays. So in other words, wait, where I have to say I'm buying puts or what?
Yeah, you're basically a trader to fit it. So what you'd be betting on, the way that we do this, because we're not looking at the option pricing to get out, is you think that the price will touch 555 in the next 2 days.
Yeah. So I say it stays above the 555.
All right, so you're fading it. He doesn't like the puts, guys. He hates them. Smid Dog?
I'm going to trade this one. I actually think I see a pull back to the gap fill, just going, I mean, it gapped up a little bit. So I think that, I think you could see that.
I mean, the problem with these
down
is,
1 minute, it could be down 555, right? This thing's crazy.
yeah, that's the
Right.
problem though. With this is you have all this econ data that is going to play a role in a lot of this, and it is overextended, from that last gap. So
This is what I call, by the way, this is what I refer to as like the hard money out there. You know what I mean? This is the difficult money in the market. Like I can't even wrap my brain around in trying to handicap. Like these are tough calls,
Yeah, that's why we like doing this, and this is why we usually are. This is why we're usually wrong too, which is even funnier. Take the inverse of what we want, and me and Smiddy would be up fat stacks in some of these. I'm gonna fade it. I'm gonna trade this as well. I think it needs a pullback. I don't like the economic data we're gonna get anyway. But again, this name could be hit 55 and then fucking skyrocket back up. So
that's the
we'll see. Last one that we got is going to be a Smiddy favorite.
Cool.
Pelosi favorite.
Oh, VST?
VST. We're going to talk puts for next week. So at OPEX, 200s, right back down to the gap that it had off this last pop.
Who goes?
I think it's actually me first because I didn't go. Ken, this is tough. And again, you got time. If we get bad data, it's totally going to
get this Friday?
No, next Friday.
Oh, next Friday now.
I feel like this name just likes to hang out, but it hangs out in a fat range.
It does.
200 would bring you back down. I wouldn't doubt that we can get back there. I also don't think that maybe this name's done. Zooming back out, you're just kind of stuck. Damn, that's crazy. Yeah, I would say I am going to trade this only because of economic data more than anything else. Okay. Smitty?
I'm short the APP, so I'm going to go ahead and
he's going for the
this. Yeah, I'm gonna fade this and say we attack the all-time highs. That way, I'm hedged on my calls.
You're hedged. You're hedged. Jay, what do you think for VST, the Pelosi favorite?
This is a tough one. I'm trying to look for a coin to flip. I'm better than that. Tell you the truth. I think it may come down there, but it probably will bounce if it comes down there. So it stays above there.
So you're going to stay above 200. So Jay does not like the puts. Of course he doesn't. He is going to fade. Jay doesn't like.
The only one I like the puts is Bitcoin related. Isn't that typical me?
That's it. So Jay faded all three. I faded the MSTR, but traded the APP and VST. And Smitty faded the MSTR, traded the APP, and faded the VST. We'll see what happens. It'll be funny to watch if Jay, is right about all of these, or if he ends up being wrong and he should have bought puts, because that's always
true. We want to be wrong here, and maybe you get your losers out here, and then with the real money, you know what I mean? Then you're due for winners. So
exactly,
that's a good way to look at it. Trying to sugarcoat this, make it look good. So, but we'll see how it goes. Speaking of Bitcoin, quickly before we wrap up, because you guys know a lot more than I do regarding it. But one thing I will say is, again, I mentioned this before. Bitcoin, it's got some short money involved there. The Bitcoin has a tendency to front run a lot of action we see, even in equities. We seen it earlier in the year, Bitcoin went sour. Then we had the equity correction. The rally, Bitcoin started to gain momentum before equities. Do you think this is anything interesting going on in Bitcoin here, or you think this is like normal consolidation? You know what I mean? What do you guys think is going on here? Why is it not? Look, you got Bitcoin miners going bananas, right? You got all these equities going bananas. They're buying Bitcoin treasury names. They're going bananas, and Bitcoin is not doing a damn thing. What's that all about?
I will defer to our resident guy who still likes to trade crypto.
Yeah. So what is there a storyline there, or?
Yeah, so I think part of what you see is that you nailed it. It does trade highly correlated to the markets, but it's a much more predatory games. And because a lot of the exchanges are allowed to trade against clients, what you tend to see is big liquidations. So
right, that's what I heard recently. I was going to ask you about that. Yeah.
Yep. Yeah, so I have a product called Kingfisher, and these guys track liquidation levels. So you can literally pull up a map in the morning and see where, let's say you want to track the 50x leverage guys, because those are you can pick them off, right? So if you want to come in, you got a big stack, you sit there and you go, you put a little bit of leverage on, but then you just sell this thing till you choke these guys out and they cover, and you can see it all, right? You can see in the book where these guys get smoked.
Smitty, that's something that fascinates me because I don't trade crypto, but excuse me, you heard of Glassnode or whatever, they got crazy positioning parts and shit. I love that stuff. Like every little detail they follow.
Right. And exactly. And because most of it's on chain, right? Whether it's on chain or a centralized exchange, you can get that data. And Blackstone's really good at it. That's a good product, honestly. But yeah, so that's what they do, right? Is the big guys pick off the little guys. And, you see it even in active wallets. So just to kind of loop it around, like Solana users went from, I think there was 5 million a day active users. And all these jabronis are betting, they want to 100x their money, right? So they're betting $200 10 times a day. And now we see Solana active users on the exchanges down to about 1 million unique wallets a day. So, these little guys come in, they have, they get a couple paychecks, they save a little money. They want to go throw, they want to turn $1,000 into 100,000. So they go crank the leverage, and then the big guys come in with a bigger pain tolerance, and they can wait, and then they get these moves. The moves kind of catalyze and stretch, and then they get blown out. And, the big guys will do the same thing that our market makers do in traditional markets, where they are delta hedging, right? So there are pretty active options markets these days, Deribit being one of them. And so these market makers can go in and hedge their book, and they're going to scrape the premium as they wait for the little guy to get smoked. And then he does, and they'll cover their shorts or, have their longs just keep running. And a lot of these guys have been in the game so long that, I'm myself included, right? So if I go in to start selling options against my spot Bitcoin, I'm laughing at any premium I scrape because my average entry was, sub $3.
So low,
So it's kind of like, if I can sell 120 calls all day long, and if it hits 120 and they take my coin away, I just booked some silly amount of gains plus the premium I scraped over expiration. Right. So, and that's a lot of those players. A lot of guys in the Bitcoin world focus on accumulating more crypto, and worst case, they end up with a big pile of tether, and and they have avenues to spend that money. We're starting to see real estate, and I know car dealers, I know watch dealers. So that's a lot of those guys play that game where it's like, if you make your money, instead of having to go pay a bunch of taxes and do that game, you're like, let me go buy a nice, go buy the Rolex or go buy your Lambo or whatever you like. And that's kind of what they're doing.
You think that suppresses some of the momentum? Like, it slows it down in a sense from like over time?
Honestly, I do. I do think, and I think a lot of these treasury companies are going to start playing effect as people pull.
That's another thing, right? Yeah.
Right. Assuming they custody the coin, because when they actually custody the coin and they pull it off chain, it sits in a wallet, that's less supply, right? So there's a lot of weird aspects that are a little different, right? It would almost be akin to you getting paper shares and putting those in a safe. And then it like reduces float that the rest of the world could trade.
Wow.
And there's
this is crazy shit like I have no idea about. And because I didn't never trade a crypto in my life yet.
Yeah.
Still, so
don't start now.
No, look at you. But no, interesting, definitely interesting shit.
Cool.
Yeah. It's it is a neat technology. It's fun to have been a part of it from the early days and watch it grow into now what I love to do.
Yeah.
Right. But it's, I will say I feel a lot better about just playing in traditional markets. There's a little bit less anxiety around like, am I going to wake up and my entire stack of money's gone because the guys, unplugged the servers and ran off with all the crypto. It's like, I'm not worried about Schwab running off with my stack of money over here. So.
Well, it's funny. We talked about 2008. That was kind of the fear. You started seeing banks go under, right? For the first time ever, people were worried about, oh, shit, is my money safe at the bank? Like, that's like every day in the crypto markets, for crying out loud.
Yep.
But you got paid for that risk over the years, so.
Bingo. Yeah, and it was I earned some gray hairs doing that shit for as long as I did.
Sure.
That's part of why I stepped away, man. It's like you get scammed a few times. I bought a bunch of NFTs thinking I was going to make that money. The stupid, monkey JPEG bullshit. It was, you had to gamble, right? That was the soup of the day. So, but it's nice to have stepped away, and now it's like I have my spot. It's kind of like when you throw gold in the safe, you're like, yeah, it's there, whatever. Long-term kind of stuff now. So, but I'm happy to be out for the most part.
a lot less stress, put it that way. Right?
Exactly.
Yeah. Well, gentlemen, Jay, thank you so much for joining us.
Yeah,
much appreciated.
Have me back soon, hopefully, and we'll talk some shop, but I always enjoy it. Thank you.
Yeah.
For
See, the thing is, you always have to be careful when you say these things, because then what I'm going to do next time is I'm going to say, all right, Jay, you're on. Not only with me and Smiddy, but
yeah,
I'm also throwing Ron Chero on here. Ron's going to.
Oh, no. See, I didn't know you were going that far. I got enough right now. Now
He misses me. He misses me. You guys heard it here. He misses me not chopping it up.
Like root canal, I miss him.
Yeah, exactly. But thanks again for joining us, Jay, Smiddy.
Yep.
We'll chat here guys soon, and we'll catch you guys on the next episode. Check us all out again at steamroomtrading.com. If you're interested in hanging out with Jay in the room and listening to what he says all day long on the live broadcast and his takes on flow and the sentiment. And again, check out his free YouTube show every Thursday after the close on our YouTube channel at Steam Room Trader. And we'll catch you guys on the next episode.
Later, everybody.
Take care.